Today is a somber day for the world and Indian markets. All asset classes are crashing except perhaps gold and US dollar. These are indeed troubling times for us. Welcome back to Berich. Even as I speak, the Nifty is 9,700 and the sensex is hovering around 33,000. These times are testing times. These lows have not been there seen since September of 2017, that is nearly 3 years away. The market is expected to decline further as the cases of coronavirus are spreading across Europe and America. America has announced a lockdown with Europe and even has said cargo is banned. With supply chains breaking down, the world is facing a supply and demand shock. But in case of India, the problem is not of coronavirus alone. Coronavirus is a trigger. Raghuram Rajan spoke in a TV channel yesterday and he clearly said India needs an emergency cleanup of its financial system. If we do not clean up our financial system, protect depositors, bondholders, this problem is going to continue and fester. India's EPS, Nifty EPS, is only 415. A multiple of more than 20 times earning is not justified when you expect a recession across the world. Therefore, I expect it to correct by another 1,500 points if this trend continues. Rajan also feels that there will be a credit freeze across markets, and so, first, all the gig workers will be in trouble. Those who are in salary will continue to get salaries even if they are forced to lay off work. But gig workers will be in trouble. Next, SME and MSME will need backstop credit arrangements across the world. If the SME sector and the MSME sector do not get backstop credit, they will begin to collapse. And world markets, credit markets will freeze. The first priority of the world central bankers is to unfreeze the credit markets and allow free flow of capital. In India, the Yes Bank case has gone to court. RBI has promised a compromise with the bondholders. The sooner it does, the better it is. Today, there are stray reports that HDFC Bank and Kotak are going to be investors in Yes Bank. There is no clarity in Yes Bank. To add fuel to fire, State Bank of India has cut deposit rates for savings account to 3% and cut the fixed deposit rates to 5.9. After taking tax deducted at source, the fixed deposit rates fall to 5.3, makes it very difficult for anybody to make a living. Senior citizens who are dependent on deposit income are going to be in serious trouble. India requires a big fiscal stimulus which will stimulate demand. Cutting fuel prices by 15 rupees means we can give that demand. The government is refusing to do so. Unless we stimulate demand, the chances of this economy recovering are very difficult. The actions in the Yes Bank case have meant that the credit markets in India have frozen up. And new credit, even for a good borrower, people are finding it difficult to borrow. Overall credit flow is dropped to 6.4%. Credit to commercial sector is at negative growth. If you are going to have stats like this, no amount of pumping liquidity is going to sort out the market. India needs a solution to its problems now. It requires quick and surgical reforms before this market can recover. Thank you. Thank you for watching Berich. If you like this video, kindly share it among your friends and relatives. Also, do not forget to press the subscriber button and turn on the bell notifications. I have two announcements to make. One, if you want to buy my books, please send an SMS or a WhatsApp to the number given below. If you would like to contact me, kindly drop a mail to berichenglish@gmail.com. My team will get back to you. Once again, I thank you for watching Berich.